Hi, this is Ron Janish, and to give you an idea as to what exactly is in this video, this is a list of questions, and we're going to have a little quiz at the end. And don't worry, you'll pass the quiz. It's just this is to give you an idea as to what's going on. All right, so if you want to quickly look this over, maybe even freeze your screen, you'll be able to have a pretty good sense as to what questions we're going to go over and see to it that are answered at the end. All right, here we go. Here's our disclaimer. Remember that trading by nature creates risk to capital. During this webinar, only educational examples are shown, and on and on. And remember, this is an examination of the techniques of Dr. Alan Hall Andrews, along with subsequent research. Now, one of the questions we're going to ask is the Andrews method right for you? And what we found is that successful traders are typically in four different groups. They're either breakout traders, they're reversal finder traders, they're pullback traders, or they're kind of like theme traders. And I'm going to show you what I mean. Some of the ways that these kind of traders might trade. Now, a breakout style would be somebody who, let's say, like here's an advanced, Andrews Trend Reversal Indicator, ATRI. Well, here's an ATRI, and so it determines this here. And so after a breakout, because of a highly probable reversal in this area here, goes and winds up and buys. Okay? And same thing happens over here. Right? Then there's what we call the pullback style, and this chart here we're actually going to use for some other in-depth information later on. And notice when you have a couple of numbers over here, okay, what you really had was you had several things, and I just made a list, 1, 2, 3, 4, 5, and then what I did was I looked and see when you had number 1, when you had number 2, 3, and 4, and typically when you use pullback mode, these indicators were then true. Okay, and I looked for when they were true, and if somebody trades in pullback mode, they're typically saying, okay, over here is a high probability of a reversal. And so prices come down, and then a week or so they come back up again, and this is a lot of time. And then they have this other indicator coming in, and they can have some pretty tight stops, and down we go. Or let's say they're buying over here because over a week ago prices made this low here, and let's say their Andrews trend reversal indications were that prices were going to go up. So very straightforward, prices come down here. This gives a nice entry area, and away we go. And that's a pullback mode. Okay. Now some people use a very simple pullback mode. They just use 50 when prices go back to a 50% or 0.618 or something like that. All right. Now let's move on. How about the reversal style? Well, this is a recent silver chart. Matter of fact, I put it up yesterday. And prices went up and reversed at the ML. And down here you had an ORE, and we'll discuss that a little more. And people looking for reversals, for example. And that's another style that people who are successful with Andrews. And then there's the theme style. Now the theme is a little different. This is a treasury bond chart, and you had a nice Andrews trend reversal indication up here, and you had one up here, and you had one over here. So theoretically prices would be going down a ways, and you'll be able to see that. I put this chart up yesterday, so we'll see what happens. And so the theme, let's say for example, is, oh, the bonds are going down because Ben is doing this and this, and that might be a theme. Another theme is for stock traders, for example. As a stock trader, what I used to do that was really kind of neat when I was in the headhunting business was I would look for companies that had a certain hiring style. And if they had that hiring style, I would then buy the stock. And the reason I did that was because I used to work for a company called Rome. They were eventually bought out by IBM. Okay, and Rome, what you learned at Rome was how they hired people, and they had a very very unique way of hiring people, and uh, this particular unique way is actually applicable towards any company. And what I found in my research over the years was that when a company used this style for hiring, they were typically incredibly successful. And in some cases, there were people who were just hired using that fit this style that worked for when there was somebody like this guy Kevin I know, he worked for companies that looked for people like him because of his unique attributes, and the result was that this company did very well. And I did a research thing on people like him. For example, these are called rainmakers, and Rome was known for hiring a lot of rainmakers. And what I found with Kevin, for example, I just kind of plotted what companies he worked at and when he started and when he left. And these were typically stock exchange listed companies. And I found that had somebody bought and sold based on him working for that company, um, the amount of money they made was absolutely astronomical. So apparent, and there were tons of ups and downs in between, lots and lots of ups, lots and lots of downs. It's just he coincidentally, wherever he went, he brought the rain with him. And by the same token, I also found people that were what I call undertakers, and these are people that when they went to a company, within 6 months, the writing would be on the wall that they would do very very badly. And I can remember one unique case where they hired a rainmaker and things suddenly went great. And then all of a sudden they hired another guy that was an undertaker, and it was like, oh my God, things are gonna something happened. And sure enough, um, the rainmaker left, and the rest was history. So anyway, so there's a theme, and that's the theme I used. And what I would do is I would buy the stock using an Andrews indicator after I had a good pullback. And I used to do that with Rome stock a lot. Made a lot of money. Okay, so let's move this up a little bit here so I can read. Well, regardless of your style, this is a chart that as an Andrews Group trader you would have seen in the Andrews Group. And what we do is we send out charts every once in a while and kind of note what lines we're using and what we find interesting at that point in time. So now Andrews was an absolutely amazing man. He could have looked at a chart and given very accurate forecasts. Fortunately, he left us with the insights to his brilliance, which he documented in real time. With this techniques, Andrews would estimate future target areas. And typically in these target areas there were certain things coming in that would indicate possibility of a reversal. Possibility. Okay, perhaps this is a chart that Andrews would have posted prior to Christmas. That's, that's what I did. So anyway, so what happened was we gathered up the material seen here, and this is now called the expanded course material. And it's derived from the massive original library of weekly notes, newsletters, and charts of Dr. Alan Hall Andrews. Here you see hundreds of documents all laid out on a table ready to be sorted. It was a lot of work. Let me get a drink here. The contents of this massive written material goes far beyond what Andrews presented at the live seminars which I attended. It goes into the real-time thoughts, insights, and techniques of Andrews that he wrote about over decades, mostly over a time period that he was very cognizant and very, very with it, so to speak. As we know, when people get older, they kind of lose it a little bit, right? In some cases. So This is when he was really with it. And as near as I can tell, um, the time when he was absolutely at his best was pre 1975. Now, some of this material he only wrote briefly, and then decided they're better kept a secret. And I'll show you some of this along the way. We discovered some of that material. It's it's a total of hundreds, or close to 1,000 pages that we organized by date and other factors to make research as easy and practical as possible. And now, after the pages are organized in photocopies, we put them into 3 massive volumes. And this is what one of those hundreds of pages looks like. This is where Andrews wrote by hand how to do what he did. And eventually my library of the originals, including the originals of the document you see here, are going to be donated to the library of an institution like MIT, where Alan Andrews and Roger Babson attended. And this is what it looks like when we put it all together. These are printed photocopies of the massive documents. We put it into 3 volumes. We hold nothing back. We put everything in here. And then we also include 26 videos that focus upon the material in these volumes, and give it perhaps a different way of looking at it, or a different or my slant on what he wrote, or something like that. And also videos for most people are much easier to handle than written material. Now, so what does this written material really include? Well, it included what I consider the most incredible marketing trick in the world. What he would do in order to get new course members is he would send them out this newsletter after they responded to an advertisement. And he would show them how to turn 5K into 50K simply by reading a script to a broker. How this was possible before I read through this and investigated it was mind-boggling to me. But I'll show you how I think he could have done it. Anyway, so here's an example of orders indicated for coming week. Cover the June hogs at 26.10 with your broker, and buy the take profits in the cattle at 31.20. Weekly order also, and this would be something you just simply read to the broker. Absolutely amazing. And what also would be included in the newsletter is, hey, what happened so far? So let's say you get this newsletter and go, yeah, this guy's going to turn 5K into 250. We'll see, right? So you do that, and you're sitting there and you're getting this newsletter, and in the 1 week it says, so the total net profits for the past week are about $2,000, and because over here he goes into exactly what happened, what trades were hit, and what trades were not. See here, for example, the short sale indicated in the last letter for August pork bellies at the market opening Monday at a price of 41.50. Confirmed the indicated direction for the price at Friday's close at 39.05, showing a 2.55% profit of about $750 per contract. Huh? I mean, friggin' amazing. So the total net profit for the past 2 weeks is about $2,000. Assumed a capital of $5,000. This is 40% in 2 weeks, a rate of over 1,000% a year, much over the 100%. Okay, amazing, absolutely amazing. So he would do this, and then in addition to that, he would send out charts with things on them, and one of the techniques. So you'd send out, like in some cases it was a 1-page newsletter. Sometimes it was like a 3-page newsletter. And so he would send it out, and what he would do is, how can I put this? He would tell people exactly what he used and exactly how he did it. And the ORE was an indicator that Andrews wrote was his best for entering the market to get in near the extreme of a move. And just for grins, we were playing with this thing, and we posted the results we got on August 9th. And this in the market, the S&P was coming down like a falling knife. God, 1350 came down to under 1100, and in a matter of a couple of weeks. And these are all daily bars. So what we did was we put the OR indicator out there, and sure enough, it bounced right off the OR indicator. And so we posted this on Andrew's course WordPress blog site, which was kind of different. So anyway, what and since then we've looked into it a little more, as I'll show you in a minute. Anyway, in the spring of 1974, he wrote that it was reserved for use of charities and educational institutions, and thereafter he stopped writing about it. Fortunately, we have his notes. The OR chart was posted on the andrews.com blog site along with other ones. Let's take a look. This is one I sent out to the group on, it was right before Thanksgiving of 2011. And this is an intraday chart, S&P, and I noted there was an OR up here and there was an OR over here. Okay, and these are intraday charts, and when you use the OR on an intraday chart, you have to use the right size bar, otherwise things can get rather messy. And we'll tell you what that is in the course. We cover that in the videos. So sent this out, and over here it says Janish reversal line. Well, truth be told, that was really a massive OR, and that was coming in there, and it was coming in, and we used daily bars for that. And this was at, as you see here, a price of 11.50 in the S&P. So that was about over here in the S&P, and as you can see, prices went up a bit after that. Like I said, that was a massive OR, and then prices went down again. I know later on probably show you that this is where we found another OR point. So that was kind of neat. Anyway, so anyway, moving on to what was the technique used in Andrew's 5K to 50K annual demonstration in his course letters. We're going to get to that in a moment. This will be called part 2. We're going to call the part 1 the part you just saw, and this one will cover a whole bunch more information. Also cover the other answers to the quiz, answers in the quiz. Okay, and so we'll make the videos a little bit shorter, and let's just think of the first part as the different styles. Okay, and that's what's important. So anyway, so we'll hold this for now and see you at part 2.